Oh, hi. I'm a smart investor. I dare say that because I understand the cryptocurrency markets and I am up to date on every new development, fintech and blockchain ecosystem. All because I watch the Inside Blockchain show on Crypto TV Plus. Every Monday morning, Crypto TV Plus brings you news headlines of top stories, interview with an expert, and give you detailed market analysis to enable you make the right business moves. Now you too can become a smart investor if you don't miss it. The Inside Blockchain Show, only on Crypto TV Plus.
It's your boy, no, sorry, it's your daddy, Mr. Macaroni. Keep watching Crypto TV Plus if you want to be doing well, especially. You get me now? Alright, you're doing well.
Hello and welcome to the program. This is Inside Blockchain, live from Crypto TV Plus. I am Bobby Adiki. The crypto market is crashing, and two of the world's largest cryptocurrencies, Terra's Luna and UST, face unlikely extinction from a multi-billion-dollar bank run. Now, apparently, we can't say if these coins are going to recover or not. And the big question on everyone's mind right now is, how did this happen? And what does this mean for crypto folk? Now, to help us answer some of these questions, two heavyweight crypto experts will be joining me live on the Inside Blockchain. But before I introduce them, we'll go on a quick break. I'll be right back.
Like it or not, Move to Earn have emerged in recent months, and what they do is they basically bring together elements of play to earn and fitness apps, mash it up and reward users for exercising, which is absolutely motivating and pretty cool if you ask me. Hey y'all, welcome into the metaverse on Crypto TV Plus. Today's video will fit different as we're going to be taking a portal into the iStep metaverse, so get fit and follow me. iStep is a lifestyle app on the Binance Smart Chain ecosystem.
Hello, my name is Chiki and I'm the Bull of the Bullet.
Keep watching Crypto TV Plus.
Don't touch that. Peace.
Welcome back. Thank you for staying with us. This is still Inside Blockchain, live from Crypto TV Plus. And as I mentioned before, the crypto market is crashing and two specific cryptocurrencies have taken the most hits. We're talking about Luna and UST. Now, joining me live to help us answer some of the specific questions that most crypto folk, have right now is Rume Ophi, also known as the CryptoPreacher. He is a cryptocurrency analyst and founder of the prestigious Cryptocurrency Academy. And also joining me virtually is Lucky Uwakwe. He is a founder of SaBi Exchange and also a co-founder of Store. I hope I got that pronunciation correct, Lucky. Is it Store or Store? Store, right?
Store.
Okay. It's nice to have you gentlemen on the program. How are you today?
Thank you. I'm good. Nice
Good.
to have
That's
you.
fantastic. So before we proceed, I think the general question to ask right now is, how are you feeling the cryptocurrency market?
For me, it's really in a bad shape, honestly. But of course, we've been here before, so not new. But this time it feels different, I must say. Just like I was saying earlier before the program had started. So no one is taking it very easily or likely. It's been a very serious, troubling one for everybody.
Yeah, but we can only get better. We just have to take consolation in that fact. What about you, Rume? How are you feeling the crypto market crash?
It is not an easy one, but it happens over and over again. I just have this concern now that I have a lot to attend to in terms of the young persons that have not experienced this before. We have to do a lot of reorientation that this is what we've been talking about, and here it is.
Wow, that's fantastic. Okay, so let's just dive right in. So we're taking a closer look at TerraUSD, which is also known as UST. Now, this is a decentralized and algorithmic stablecoin of the Terra blockchain, which is different from fiat-backed stablecoins just like Terra. Most of us know it as USDT. Now, this is at least backed by real money, such as the US dollar. Now, our algorithmic stablecoins, or as most people call it, algo stablecoins, aren't backed by anything. Now, they maintain their peg to the US dollar or euro with market dynamics by incentivizing arbitrage. Now, I'm not going to go into exactly how this arbitrage works because it's quite complicated. I think I'll just allow the experts to explain in more detail. So, Rume, I'll start off with you. Now, with $1 billion hanging in the balance, which way do you think this will go? This Terra scenario, which way do you, let's hear your thoughts on that.
All right, thank you very much. This is a serious situation we have at hand. And I think what we're going to see at the end of the day, even if they scale through, we're already seeing signals from the US government come to say the stablecoin industry has to be well regulated if possible. Government always try to put their fingers in things like this. It's just my fear. And also, a lot of people are seeing these as more like if a project of this magnitude can drop below 90%, it only suggests that it could be a rock pool, of which I think the team for Terra Luna, they are going to work a lot to be able to convince a lot of people. I don't want to bet on this, but it's a situation where I think it could provoke more regulations in the crypto industry.
Okay, well, that's very, very fantastic. So the same question to you, Lucky. How do you think this whole scenario, which way do you think it's going to go? What are your thoughts on that?
Okay, my thought, of course, is because clearly from the model of recovery that I've put out, it's a case of they're trying to fight two fronts, meaning they're trying to save UST. They're also trying to ensure that Luna do not necessarily go down the drain. But it's clear that Luna is the one that will be sacrificed, sort of, in order to save UST. And that's why you see more Lunas that are more into circulation of late, just to help it go forward. But looking back in hindsight, in terms of what they've done, it's clearly a case of a principle that wasn't right. And the only simple thing that wasn't right here is that for the fact that an algorithm stablecoin work from the perspective of people believing and having trust that it's stable, whenever trust is lost in an algorithmic stablecoin, people naturally will just sell off. History have had that before with the case of the things that have happened with the likes of USDN, Amplifort, and all that kind of similar type of token. But UST Terra had been able to do something very unique here. For the first time, we've been able to see that a project is willing to even back an algorithmic stablecoin with some sort of asset. But the question is, backing up an asset with an asset within the same space you're playing in was a dangerous part they took. It's a case of where the reason people normally want to back up something with another is to ensure that if that particular thing is having an issue, they can be able to take from the other and cushion up the issue it has. There was no reason them backing up that asset with something within the same correlated space. They could have as well used, for example, gold, which is not really correlated with crypto, or they could have used any other kind of thing, whether fiat, as the case may be. So even though it's an algorithmic stable coin, they had already put up $10 billion worth in terms of asset to back it. But the bad part is they had utilized the highest cryptocurrency, which at that time was Bitcoin. And of course, it means that for every time there's a pressure on Bitcoin, it's also affecting Luna. And if it's affecting both Luna and Bitcoin at the same time, definitely trust to be lost. And I think that's where they got it. And that's
fantastic. So speaking of, you did mention something about according to history, and we've equally observed historically that every single algo stable coin has eventually at some point lost its peg in what is known as a death spiral. Now, a death spiral simply is a scenario where people lose faith in a coin finally and rush for the exits. And now, because the stable coin is not collateralized in any real way, most people end up losing money in these exit situations. Now, Lucky, do you foresee something similar happening here? Because you did mention something that you feel Luna will be the sacrificial lamb, in this scenario. So just help us make sense of this. Do you think something similar to a death spiral will happen here? And if yes, why?
Okay, so I believe it will still happen for the fact that first, the industry is still growing. It's barely 10 years plus old, and more experiments will still be done. But just the unfortunate part is sometimes when these experiments are done, people lose real or hard-earned assets, especially when they choose to trust or put their faith in such kind of system. However, I expect that people would be able to learn. If you look at history from the side of what happened to UST Terra, they learned a bit from that of Iron Finance when their own algo stablecoin also lost value because of some exploiting code. But unfortunately, this time it's not like where people exploit the code per se, because of course Terra, Luna, UST, all the codes are still working fine, but just purely a case of where the stories that on the round is that people, some more heavy titan or bigger weight decide to borrow more money and dump at the same time because originally they had shot some futures behind the scene. So I expect some other ones might take shape, but these kind of incidents will help the industry cushion well. Why? At the wake of 2018 investigation or 2020 investigation to the likes of stablecoins like Tether, they improved their own mechanism to ensure these kind of things do not even happen. In fact, barely a few hours ago, I was listening to the CTO of Tether, who was speaking in one of the Twitter space, where he made mention clearly that Tether is heavily backed, and not just backed by just the US dollar, but even some other kind of assets. He even encouraged us to also go to Tether website and see some other things like treasury bills, bonds, and some other things they had put in place to ensure that. But the effect of what had happened to UST Terra had already spiraled a little bit into that of Tether this morning, where Tether that is normally traded for 1-to-1 or maybe 0.99 something, had even go as low as 0.94. So, which clearly showed that people sort of still panic, but maybe they've been able to arrest the case because, as I said before I came on the show, I checked again and I saw that it's back to 0.98. So, yes, I expect this to still happen again, but because the industry is learning and learning very fast, I do not expect that when people panic, sort of, it will go pretty terrible bad like the way it did for that of UST, as we've seen. But I expect it to just do something like what happened to Tether this morning, where it went a little bit low to somewhere around 0.94 and then bounced back almost as soon as possible in less than 2 hours.
Okay, that's amazing, simply amazing. So, Rume, can we get your take on this? Do you think something similar to a death spiral would happen, in this Terra scenario? Briefly.
What I think is Lucky has actually quite said a lot of the things that I think I want to comment or do. But what I think is going to happen is, this industry is quite young, and the fact that it's quite young, we've had issues before now. People trying to find out what USDT Theta is actually being backed with. The idea that it's being backed with US dollar and other assets is also a concern concerning the fact that the US dollar has lost its value a long time now, and you can see the inflation figures, you see the CPI figures came up yesterday, and a whole lot of things going on. It does, for me, it also seems that there's still a lot that is going to happen in this stablecoin ecosystem and the crypto entirely. So it is most important that people should not use this UST issue to judge all of the stablecoins, but also consider the fact that the industry is quite young, but we all need to sacrifice for now and see how far we can have a better ecosystem. Probably there should be some kind of mechanism that could put stablecoin in better light. But if you ask me, what UST actually, the algorithm, the pegging of all of the UST to Bitcoin is actually not a bad idea, though, if you ask me. But it's just unfortunate that sometimes your good ideas could go bad. So that's a peculiar case. For example, even if you are backing with the US dollar and the US dollar could, or your liquid asset could not hold again, such a scenario could also play out. But we're going to all learn from this. And now it's in a situation whereby maybe we'll have to see a name change, like stablecoin can't be a stablecoin anymore, because at some point it has to go the other route.
Exactly. That's simply fantastic. So we still have a lot more topics to... you wanted to say something, Lucky?
Yes, and if I must add, the concept of people issuing stable-backed coin is not just peculiar to the crypto space or just to this nascent industry. The IMF have something that people might not even know about. There's something called SDR, which is a backed type of asset, or a basket made up of basket of assets, but only held mostly by IMF, which comprises of the likes of the dollar and some other major currencies, where for every one SDR by the IMF is equal to $1. People should also take note of this. So the concept of this type of thing around stable backed asset or tokens or whatever you want to call it is not just peculiar to the crypto space. It's even there in the traditional financial space.
Oh, that's impressive. I guess we learn every day. So we still have other things to talk about, but we'll go on a quick break. Stay with us.
Imagine say you carry your last cash, your last 500k, bury like this now. Say, okay, make I go invest in Bitcoin now. The ticker crash down to 2k. 2k people they talk say 2k urgently now. What you go do?
Afodero they go village now. Afodero they go village because there's nothing I can do. No be bank where we say if you go bank go para for them. So.
But you know, say the thing they go now today. If you crash, they feel us go up. You know, go get fit again now.
I'm not sure of this one again. No. I'm not sure say this one will rise to my anybody amount again.
The cool thing about NFT is 1 minute it can be about a tweet raving all over the place and causing all the money madness possible, or some digital collectible just randomly pops up. The Cyberbrokers NFT is tickling my fancy and I'll be delving into it in a minute. Cyberbrokers was created by Josie Bellini, who was previously in finance, but she left that world to join the cultural revolution of crypto. Josie has been creating art that tells the story of the crypto.
Hello, my name is Chiki and I'm the Bo of the Bull.
Keep watching Crypto TV Plus.
Don't touch that. Peace.
Welcome back. Thank you for staying with us. This is Inside Blockchain. If you're just joining us today, we're looking at Terra, Luna and UST as we're taking close analysis at the current cryptocurrency market crash. A lot of people have lost funds, a lot of liquidation, and a lot of things have happened, and some people are wondering, a lot of skepticism, a lot of FUD, fear, uncertainty, and doubt. And to help us make sense of some of these questions that you, the viewer out there, might have is Rume Ophi, also known as CryptoPreacher. He is a cryptocurrency analyst and founder of the prestigious CryptoPreacher Academy, as well as Lucky Uwakwe, the founder of SaBi Exchange and co-founder Store. And before we went on a quick break, we were trying to make sense of some of the implications of this current situation with Terra. So now, one of the few reasons, I think this question, I would want you to take it, Rume. One of the few reasons why people have invested so much into Luna and UST is because of a decentralized savings protocol called Anchor Protocol. Now, this protocol promises people a stable return of around 19.5%, which is obviously insane, especially given how stable coins are supposed to be. And this has led to, a lot of speculations and accusations that, it has all the trappings of a Ponzi scheme. Now, what do you make of this, Rume?
Staking, it's also a way to earn, but I don't think, this more like the 20% thing, if you ask me. Is a way to further.
It's almost it's almost the 20%. Yeah.
Yeah. So it's a way. It's a way. I stake. In fact, I'm one of the crusaders of staking because it is better you stake than you go get into the cancer of doing futures trading to lose all of your money. So but the fact that 20% is given annually at the end of the period. Most times, I think it is not that bad. It's just a situation where then you could get more liquidity to push all of these. People stake, they get APYs. So and I do that. So for people to think that it is because of that amount of money or percentage being given back, it is the reason why they got into this trouble. I don't think that is actually. Well, correct. I could be wrong on that anyway, but I think there are some other platforms that do even more than that, and they're still standing strong. Maybe by adventure, all of the stories that we've been expecting before now about stablecoin. At some point, stablecoin took center stage around how it's been backed, if they really have the amount of money. You know, USD Tether actually has some issues at some point with if the amount they have as liquid is enough with the stable.
You know, and they constantly refuse to audit some of their, you know, backed assets. So I think that's, yeah.
It would have been more. It would have made a lot of sense. I think USD they are going to move ahead of this because recommendations are now coming on proposal on how they could manage all of these things. Maybe we can see some borrowing in the future and all of those things. At some point, I think Binance actually gave some assistance in respect to that. If I'm very correct on that, you know, so we'll see a better USD in the future. But going forward, I think there need to be more overhauling. But I don't subscribe to the fact that it is the 20% that is the challenge. You know, other protocols are actually staking. Some are doing more than that. Some are doing less than that. It's just unfortunate that we are seeing a good project go this way. And sometimes one would want to think that if it is the project coming out from Africa, there would have been some sort of war at the background.
Yeah, that's the sentiment, you know, expressed by many. So, Lucky, a lot of Luna investors, you know, they often call themselves lunatics, you know, which is very amusing. So they've said that this Anchor protocol rates are quite unsustainable. There's a 20% yield, and they claim they're just being used as a growth tactic to get people into the ecosystem. And they also said that these rates will eventually be lowered over time. Now, in light of the recent activity, do you think this claim is valid? You know, based on the previous conversation about the speculations and accusations of this particular project being a Ponzi scheme. Kindly share your thoughts on that, Lucky.
Okay, unfortunately, I will have to deviate from my other co-speaker, especially for the fact that I have a different opinion to say that Anchor was also part of the downfall that led to where we are today as regards to UST and Luna. And my simple reasons for saying this is, first, also as somebody who have a good understanding around DeFi or decentralized finance, there is no way you will sustain 20% APY for that long, for that volume of users who are coming on board, with that volume of billions of dollars being locked in. Now, yes, it's true that there are some other APYs that do higher, but when you make it fixed, that becomes the problem. It should have been a dynamic thing that should have changed very early on, many months before now, for the fact that at the initial stage, yes, that was to bring in more users to come on board, but after a while, where more monies were being locked in the TVL and the total values that were locked in the protocol, there was no way that was sustained. It was crystal clear. Everybody who understood how DeFi worked at that time started calling them to find a way around it, because the only way they can clearly sustain that shows that there is something wrong, or it's like more like a Ponzi scheme. But of course, I'm not going to accuse them from the side of saying it's a Ponzi scheme, but it's clear now as a result of how UST even dumped far worse than
exactly, you know.
It's clear now that those money that were some of those excess or the monies that were paid out were clearly excesses of the real value of what the total amount of UST that should have been in circulation. So technically, they were printing more UST or more stable token at that time and giving out as interest in exchange for not having something really backing that at that very moment. And now we're sort of paying the price. It's just like saying the way people are also complaining or saying that there are too many money from the US Fed being printing money left and right. They're going to come calling, will pay the price for having too much funds in circulation. So something similar is on a lower scale, if I would say, compared to the US Fed, is what has happened. It's clear that that interest that they were paying were no longer sustainable. And when they went ahead to still continue to pay that, we sort of have paid the price today. And clearly, to mop up the excesses from the market, that's why you see they were dumping more Bitcoin, they were dumping more Terra in order that they might bring back UST to its real value. Yes, there was an initial effect, but then the remainder part of the effect were clearly because things like Anchor were existing, and of course they've been paying up money they didn't really have. Yes, it's possible that people could do even far more than 20% APY, but not sustainable for the length of time that Luna or Terra had ensured it should be. It should have been a variable type of APY. I remember so many APYs who even started as far as even 100% or even more, went even as low as 8% as we speak, or maybe somewhere around 12%. Maybe that is sustainable because as more people borrow that money which you have locked in your protocol or pool, a time will come when there might be too many of that money in circulation, and you're not having enough clients who wants to really borrow. And that's also even happening in traditional banks. Sometimes they have so much money in their hands that nobody's even willing to borrow. And at the end of the day, what happens? They have no choice but to cut down the interest rate. Central bank, even in the treasury bill, when they see that they've printed so much money that nobody's even willing to borrow again, they have no choice but to cut it down to something realistic. So Anchor, maybe for the fact that they just want to maintain some level of good name, or they want to maintain the momentum they were having, chose to maintain that peg. And in turn, they were doling or dishing out that percentage as they so wish, keeping that same original peg. And now, here we are. So I believe strongly that Anchor also, and the percentage they promise throughout this time without needing to change that variable, especially on the downward side, also were part of the things that we're all paying today. That's my own viewpoint in terms of the situation about Anchor.
That's fantastic. So before we crunch some numbers, before we look at some figures, Rume, do you have anything to add to what he just said?
Yeah, I have a few. The reality is people have a certain business model that they think has changed, considering the fact that Terra Luna is it's actually big. It's a company that actually had maybe done their homework before now. It's just unfortunate that these actually happen. But when events like this happen, we'll begin to see some internal work. For example, one thing he said that really struck the chord was the fact that 20% was really not sustainable, even though it actually started at some point, and the ecosystem is actually growing. So there's supposed to be more like but as time goes on, other platforms, other industry, other company leaders, other folks in things like this. I think us here in this part of the world are supposed to learn from it. You can have a good product, and sometimes it will go.
Okay, that's fantastic, gentlemen. So now let's look at some statistics. A few days ago, there was a total of $14 billion locked up in Terra. Now, this has been one of the major drivers of adoption, and like we've been discussing, the 20% return was seen as a great investment opportunity for many, up until the crypto markets went into a free fall over the weekend. Now, Luna and UST were hit massively. Luna fell 50% in one day within 24 hours, and UST actually depegged from $1 all the way down to 69 cents. Now, as for the Anchor protocol, there was roughly $7 to $8 billion withdrawn from the protocol over the last couple of days. And now, Lucky, this begs the question, is there something we're missing? Is there something going on? Can you help us explain or explore this a bit more?
Yes, of course. The missing part clearly show that their ability to honor or redeem the peg was not sustained from the fact that they even ran dry in terms of liquidity of funds, that they had to now start bringing the assets that was originally backing the UST in question. And of course, selling them at the rate they were selling them, they might get more cash liquidity to settle some of those claims became another thing. And people, even though fueled even further the entire process, were willing to let go or lose more money so long as they're able to get something, no matter how little. This case is similar to what we call bank run in the traditional banking space or in traditional financial sector. And of course, no country had the ability to even hold or sustain any bank run, if at all it's ever going to happen, irrespective of whether it is the US Fed or whether it is any other central bank of any nation. If there is a bank run today, I can guarantee you that no bank will be able to honor all cash deposit. But the only thing is the government or the protocol, whoever the entity behind any solutions of that kind should always do is prevent whatever the reasons that will be that might lead to people panicking to the point of wanting to create a bank run scenario for you. I can guarantee you that if the population of any nation today, if they choose to ask all their cash all about once, or if 50% of any nation today decide to ask for cash all at once, no central bank in this world can even honor that. We saw that. We know that is possible even in traditional space, and of course, Terra could not be able to even sustain that. Coming from the first side that it's not government backed as well, it's coming from a private issued token per se. So this for me are some of the numbers that didn't really make a lot of sense. And the second part also that didn't make a lot of sense is for the fact that it was becoming a thing of concern where one entity is now holding such a level of amount of assets, especially for the fact that they were holding a huge chunk of Bitcoin in circulation, drying up as many available Bitcoins that are out there as much as possible. Again, I keep saying where they got the numbers wrong is the fact that they have chose to back up an asset. That is fine, but backing up an asset with another type of asset within your own space where you're currently playing in is where they got the numbers wrong, and there is no way that would have been sustained. Like I made mention earlier, even international monetary funds are not just backing up their assets with one particular type of asset. SDR, like people probably might be hearing for the first time, is an asset that is collateralized, courtesy of basket of so many assets across different boards. What it means is, if, for example, America is having issue today, they don't expect China to be having the same issue. If China is having issue today, they don't expect the economy of Japan to be having the same issue. Yeah, so technically, there should be some level of non-correlation. They shouldn't be correlated in a way. So you backing up an asset with an asset that if anything happen to Bitcoin, it affects you.
It will affect you. Yeah, that's
using Bitcoin to back up the asset within the same crypto space you're playing. It didn't make much sense to me. So for me, that numbers didn't add up. That was like my primary concern for everything. But from a side of technology perspective, from a side of service, from a side of solution, they did get it right, if I would say.
Okay, that's fantastic. So, Rume, now we understand that TerraLabs is the parent company behind Luna and UST. Now, these two coins are extremely popular and they are in the top 100 of all cryptocurrencies ranking according to CoinMarketCap. Now, we understand that the project is massive, and if these coins were to go, if I can use the word bust, billions of dollars would vanish, as we are already seeing people, losing a lot of money. Now, from what we learned from Kwon, the CEO of TerraLabs, he claims that centralized banks want to take down Terra. Now, how valid do you think this claim is, and what are your thoughts on this briefly?
I don't think that is actually correct. That centralized bank want to take Terra, although it's the industry is quite disruptive.
In a tweet, on Twitter, that's what he said on Twitter. So
I saw that too, but I think I don't believe it. That's my opinion. I don't believe that centralized banks want to take that, take it over. It just reminds me of exactly what happened in 1992 in the Philippines, where Pepsi made certain big mistake of the number fever. So at some point, so this is more like a case study. You promise people that you are going to do this. At the end of the day, it turns to the other side and you get yourself in a serious trouble. Then you say that certain persons are the one. I don't think so. I just feel that he should just eat the humble pie, come up with a way to salvage a few of these, and they could come up with something. Even if it is not going to be as it used to be, they are going to lose a lot of in the interest of a lot of people going forward. But it is what it is. They should learn. History will always repeat itself. Like I said, in the Pepsi Philippines issue of the number fever, where a lot of people died trying to get a lucky number. So this is exactly what has happened again. We just have to move on.
That's fantastic. Your take on that, Lucky?
Yeah, if I must add, in a situation like this where we're having a lot of panic sell, downward trend, or bank run type of scenario, any excuse that the owner behind the project give is almost taken as valid. And I would take, for the sake of benefit of doubt, to believe him, since he is the founder of this very project that is facing this heat. I have no reason not to doubt him why he said centralized banks are against him, or the traditional financial sector is against him. Why? His solution is clearly an alternative to what this bank or this traditional financial space offers. Secondly, we saw a big top shot like the likes of Warren Buffett, Charlie Munger, who were like the king of stock and all that kind of stuff, making claims or making statements around how the value or perceived crypto industry in general, including the likes of Bitcoin. So if somebody like himself, who is Kwon, facing these current issues, coming to say traditional banks are against him or centralized financial institutions are against him simply because he's building an alternative to what they already have, I believe him, and I see no reason why I should doubt him, especially for the fact that he's the one facing the heat. We are not necessarily facing the heat in the same proportion like he's currently facing today. And the other part is that the story out there also shows that the initial short position or the initial dump that started this entire massive sell-off came from a traditional financial institution. While I might not be able to lay claim if that is true or not, the numbers or the rumors that are out there are pointing names like BlackRock and Citadel. These are guys who are like clearly aligned with traditional financial institution, and as such, if they have seen a loophole to be able to cause this type of thing, to create this level of distrust for a project that is clearly becoming a challenger to what they offer, why should they not use it? It's like a case of competition, but the only difference is coming from an outsider. What I mean by outsider, because he's coming from the traditional space and he's not necessarily within traditional space. So I have no choice but to believe him. It's like a case of where there is war going on in a country and the president of the country is telling you that the enemies of the country is the reason why the war is happening. You have no choice but to believe him. He is the president. And he has better information.
Yeah, but taking a cue from what you said, sorry for continuing. Taking a cue from what you said his solution is actually he offers a better alternative. You did mention, shortly before now that the using or having Bitcoin, to back up as a reserve fund to back up UST was actually a wrong move. So why would you now ascertain that his claim that the central banks want to take him down is actually valid? Want to take Terra down is valid?
Okay, so now again, it comes up to the fact that we have no choice but to give excuse. Somebody needs to take the blame. Somebody needs to bear responsibility. It's a normal human emotion. You cannot, at the midst of where people are losing billions of dollars, and not even give us one good reason why. And which other reason is more logical, even if I was in his shoes, than to put the blame to an institution that have been known to backbite this sector. So that makes
but
sense.
I feel in this particular scenario he should actually own up and find a much more reasonable and palatable solution to the current situation instead of just blaming it on central or traditional finance.
Of course, owning up is one thing. The same way the traditional institutions have always said that the crypto people are the ones who are causing whatever, the things that are to do with transparency, money laundering, all the mentions of everything bad that has been done with fiat has been in recent past 5 years been pushed to
only in crypto.
They made it look like money laundering occurred because Bitcoin came into existence, not because money laundering had been there in the past. They made it look like the level of KYC and transparency crypto space is not good enough, and that's why the black market or the people in the dark web have seen crypto as the most better alternative to go. Meanwhile, if there's anything that is more private or more concealable, if it ever enters fiat, is fiat, and not necessarily the case. Of course, I'm not trying to make a case for central bank versus the crypto industry. I'm just saying that over time, excuses like this for failures in a particular system always come up, and most time you push it down to the opposing side, and that makes a lot of sense from just normal human logic.
That's fantastic. That's fantastic. I think we were actually running behind time. I think let's get your closing remarks, Rume. In light of everything, what are your projections for the global cryptocurrency market? A lot of assets are dipping. Bitcoin is actually trading at around $28,000, between $28,000 to $29,000. Ethereum around $1,900. So what are your projections for most investors, institutional investors, crypto traders? A lot of people are crying, a lot of people are wailing. What should they look forward to? Briefly.
All right, thank you very much. Let me take the first part. I understand where Mr. Lucky is coming from, owning an exchange platform. So he's trying to be a fan of the owner of the project that is just failing. You know, I know, I
Terra,
understand that kind of sentiment. Yeah. So, but notwithstanding, what I think is there's a global reset. People should understand that there's a global reset, and the centralized system and governments of this world have been hiding all of these things. It's just unfortunate that there's a war that is actually lingering for a while now, the Russia and Ukraine war. You know, so they're using that to want to cover up and see a lot of things that are going down, to cover a lot of things. But there's a mistake in our there's a lot of mistake going on. But also, again, at the beginning of this year, I think I tweeted something out this morning. There's been about $35 trillion that have been wiped from global financial market, including this is not including $1 trillion from the crypto market. So a lot is going on. There's a global reset. I'm sure we're going to be seeing more digital form of money or digital payment going on. You know, so people that are panicking for now should understand that their redemption is actually nearer than they think. This is the time to focus more on getting into the industry and get what they could get and nurture it by doing their DCA, which is dollar cost average. I know it's not easy in this part of the world, but as little as $10 to do that in a week and in a month, if possible, to accumulate, because this change is going to be revolutionary, and a lot of funds, a lot of wealth is going to be one of the biggest wealth shifts in the shorter period of time. Thank you.
Well, that's well said. So, Lucky, just to wrap it up briefly, what are your projections for the global crypto markets? You know, looking at some of the things, some of these scenarios that we've actually discussed today. Briefly, please.
Yeah, so my projection is that, first of all, what is currently happening in the crypto space, the market going down, is just a micro reflection of what the true state of the global economy is. And I expect, of course, stock market is already getting hit. The real estate is also will get its own fair share, and so many other different space. So crypto facing this, initially I used to think, it used to be that the crypto market was not really very correlated with the rest of the other world. But as more and more ETFs have been approved and the various futures and all those kind of stuff that have been approved, the crypto market have been roped in a bit to a large extent with the traditional space. And as such, the stock market getting hit will also impact most likely to the crypto space. I expect that the smartest thing anybody can do at this point in time is jump in on this almost at this time where, like, we've never gotten this kind of discount when it comes to crypto for the past 2 years. So this is a good opportunity for somebody who really understands the potential of what this industry has, not just because it's crypto, but the technology in particular and what it offers. I did that with the case of Luna Terra, and of course, I made something off that, but then it's a different story for another day.
Okay, that's fantastic. Thank you so much, Lucky. Thank you, Rume, for sharing your thoughts and insights on the current market situation in the cryptocurrency. Thank you so much, guys. We appreciate you joining us. And before I wrap it up, the Blockchain Cryptocurrency Awareness Tour 2022 is live. It's going to take place on the 4th of June at the Amadeo Event Center in Enugu State, Nigeria. Be sure to register for this event by clicking on the link in the description below. And that's all for today. Visit our website, cryptotvplus.com, to get more updates and trends captured within the world of blockchain, cryptocurrency, GameFi, and the metaverse. Connect with us on Facebook, Twitter @CryptoTVPlus, and on Instagram @OfficialCryptoTVPlus to get daily info on our programs. Subscribe to our YouTube channel and tap the bell icon to stay updated. If you have any questions or feedback about the program, share them in the comment section below. Thank you for joining us. It's been a pleasure. I'm Bobby Andike. See you next week.